Welcome back, everyone. This is episode 9 in our free Forex course here at Limitless Forex Academy. Forex in 5 minutes, and this video is going to be on flag patterns. Now, they're going to be one of the most useful patterns you're going to see in trading. I use them all the time. They're a very, very, very strong way of mapping structures of the market in order to know where the likely next move is going to be. So we'll just get straight into it. They are quite simple. Essentially, a flag pattern is a corrective pattern. Now, it's important to remember that. It's a corrective pattern. That means it is a correction in the market. The flag is the correction. So by that, I mean, for example, when we're in a bull trend, price pushes up like this, doesn't it? We have a bullish move. This is a bull trend. We're having pushes, corrections, push. Now, if on one of these corrections, price pulls back, but when it pulls back, as we know, price has structures that move not just in big moves like this. It's not just clean waves, is it? We've got smaller minor structures within that. I've gone over that in a previous video. If within this pullback, we see price bouncing between a resisting trend line and a supporting trend line, we may see a flag pattern. Now, the textbook move for this is a breakout to the upside, which is the continuation, and then a retest, and then we go. Now, it's also important to note that this may not necessarily be as parallel and perfect looking as this, so I've marked some on the chart. Now, some of these flag patterns are going to be small, some will be big. It depends on the market structure at the time. But what we notice here is that price at this point on NZD/USD is pushing upwards. It's a bit sideways, but it's pushing upwards. And if we look at this most recent push, we have a strong push to the upside here, which is an impulse to the upside, starting the bull trend again, followed by a tight pullback within this channel where price taps twice to the top side, multiple times to the bottom with wicks, and then it breaks strongly up, breaks the whole flag in this case, retests and go. Now, this is a tight and a small one, but a clear one, just to show you that they're not always as parallel, not always as perfect looking, is over here, where we have price was in a clear uptrend by this point. As we know, price continued up strongly from this push down here. Then we formed a big correction, and the key is that it's a correction because it is against the overall structure of the market and against the trend. Price forms a big correction where we tap twice to the top side very clearly here to both of these wicks, which then pushes price back down, and we tap multiple times to the downside. Now, you can adjust this up to here. You can adjust it right to the tips of the wicks. The bottom or the outer trend line, so in this case, when price is in an uptrend, the lower trend line, but if price is in a downtrend, we're talking at the upper trend line. This is unlikely to break. It's not as important because we know that the textbook move with these flags is a continuation, so this lower line is not as important. But when we see this top line, we're going to draw it always to the tips of the wicks. We're going to have it at the most outer boundary that there is for this flag. As you see then, price breaks structure to the upside, comes back for the retest. It retests this level multiple times and then continues. So put simply, just to recap, a flag pattern is a correction against the market where price moves within a channel. It's very, very easy to spot, but the key part is to always remember that it is a correction against the overall trend. So if we're in a downtrend, when price moves, when price is correcting back up, if this correction, you see, as we know, price moves like this with the structure. If you see that this structure on the retest, on the pullback, is moving within a channel like this, you can class this as a flag and look for this push down. Alternatively, if price is in an uptrend and you see that on one of the pullbacks, price is moving tight within two trend lines, we can class this as a flag, and we know the textbook move is up again. And then you can either, it's a bit more aggressive, but you can enter within the trend line from the very bottom, so within the channel, or in this case from the top to push out, or the safer bet, which is always the best one to do because then you've already let price break out and show you that that's what's going to happen. You can wait for the break, wait for the break of structure, and either look for the retest straight away on the channel or wait for the break of the full channel and the retest and continuation. It's really simple. A lot of traders use this. Flags as a corrective, just want to make sure I drum that in again, as a corrective pattern. Flags are great for mapping the structure of the market and knowing when trend is likely to continue. Because if I see one of these flags as a correction against the trend, I know that it's very, very likely that the trend is going to eventually continue, which means I can then look out for that. And then I can map which way I think structure is likely going to move and wait for it to happen, knowing what is going to happen as a most likely scenario. So this has been how to trade and spot flag patterns. See you in the next video.